Good morning, everyone. My name is Jason Collins with URL Insurance Group. I'm a life and annuity specialist here at URL, focusing on single premium life, traditional life insurance, annuities, and long-term care. I want to first off thank everyone for being in the webinar today, taking time out of your busy schedule to spend some time with me. Those of you that are currently doing business with URL, I'd like to personally thank you. We understand that there are many options as to where you can place your business, and that's why we appreciate you working with URL and certainly promise to continue our dedication to your success. Those of you that are on the call today that are new to URL, a little bit about us. URL is a full-service national brokerage that has been working with agents like yourself for the past 35 plus years. URL specializes in single premium life, fixed, indexed, and annuities, traditional life insurance, individual and group health products. We also have a senior division that offers Medicare and Med Advantage products. So, take a second, learn about all the different areas that we can help you out with. URL actually also has what we call our Orion platform. In its simplest of forms, what the Orion program does is it provides agents like yourself an avenue to generate business in areas that you've traditionally passed on. So simply you can give us a call and we'll help see the sale through from start to finish and then compensate you, the agent. So after the call today, please, again, take a moment, kick around our website, www.urlinsgroup.com, and just learn if there's any other areas that we can be of assistance to you. I'm extremely excited to be presenting this single premium life scenario to everybody today. We've all seen in recent events in the world that are affecting people's hard-earned money. And during this time of uncertainty, those that have protected themselves and their retirement portfolio have positioned themselves for a strong and vibrant financial future. I would say around 70% of baby boomers are going to need some sort of long-term care coverage before they die. And if they don't need the care, they always have questions on how can I pass this money on to my next to the next generation the most effective way. So those of you that are having any sort of those conversations right now, you're certainly going to be on the forefront of the massive wave of sales. So today we're going to discuss how single premium life can fill some of those portfolio gaps with your clients and turn potentially a bad situation into a breathe easy moment for your clients and, quite honestly, more importantly, their families. So, I do want to mention, if you have any questions during the broadcast, there is a question box in the upper right-hand corner. I'm probably over here. So just, type them in there. I'll certainly get them. More likely as they come in, I'll try to answer them. I'd like this to be more of a conversation than a presentation. So if you have any questions, shoot them in there and I'll get them. Okay. So let's get started. So what is exactly single premium life? Single premium life in its nut is it's an insurance policy that has one large upfront premium payment, but benefits that generally last a lifetime. We see a lot of folks that have term or guaranteed universal life or index universal life that don't necessarily need the large sum anymore. They have some money saved up somewhere underneath their mattress, and they would like a little bit to pass on to the next generation. They don't need, the family is all out of the house. The kids are grown. They're out of college. The mortgage is paid for, but they still want to hold on to something and not have to have those monthly premiums. Single premium life is a fantastic option for folks in that little scope of things. And it says about generally last your entire life. I will say they last to age 121. I use the word generally in there is if they want to take the money out and they want to surrender the policy. But if they want to just set it and forget it, that policy will last until age 120. So let's talk about some of the pros of single premium life. We kind of already touched on that. There's not going to be any future premiums needed. A lot of times, again, people like the idea of having a little bit of insurance. They don't need the massive amount anymore, but they don't want to pay the premiums anymore, those monthly premiums. Or let's just say they have a term insurance and the term insurance was affordable 30 years ago when they got it. And now all of a sudden it's going to start ballooning. Those premium payments are going to start ballooning up. Wonderful single premium life opportunity for everybody. They talk about the cash value builds over time. To me, this is a wonderful investment. I'm going to show you later in the broadcast. There's going to be a scenario for everybody and an example, but it does have cash value. So if they want to borrow against it, let's say your clients want to maybe go on a vacation, or if they want to, maybe help put a roof over their house, a new roof or something, they need access to the cash. There is cash value in there that builds over time of the policy. And again, they have access to it. Most importantly, they have the tax-free death benefit. There's no greater way to pass on wealth to the next generation than life insurance. So you're able to put in a premium amount, a single premium amount. That money grows instantaneously as form of death benefit, and all the proceeds go tax-free to the loved one in the form of a death benefit. So again, it's a wonderful way to pass on some money. And again, we'll talk later on how you can fund that to the next generation. Here's a pretty cool one is really new. They have living benefits. So the living benefits, you can either use them for, you can't say long-term care really because these are life insurance products, but if you hear the word chronic care. So you're able to have access, or your clients are able to access the death benefit for any sort of chronic care need. The trigger for that is the client can't do 2 of 6 activities of daily living, which we all know what they are. The things that you and I take for granted when we wake up in the morning, brushing our teeth, getting ready for work, getting out the door, feeding ourselves, those sort of things. So if the client is not able to do any one of the 2 of those 6, they're able to utilize these single premium life products for the chronic needs. And they can either use that for in-home, in their house, or to a nursing care facility. Now, most folks do like to stay in their home. I do like to mention that there's 2 ways that these single premium life pay out the chronic riders. You want to be aware of indemnity versus reimbursement. Indemnity just means that what the company says that they're going to provide you every month as far as the calculations of the chronic, they're going to pay you. And what you use it for, that's up to the client. If it's a reimbursement policy, your clients will submit receipts. They'll submit them to, they'll collect receipts. They'll submit them to the carriers, and then the carriers will approve or decline, the certain criteria there. The other neat thing is the longevity benefit. So the longevity benefit is new to one specific carrier. And if it's of interest to you, please reach out to me and we can discuss it in greater detail. But what that means is that at a certain age, of age 85, and the policy has not been used before for either, taking out for cash value purposes or any sort of, chronic care, at age 85, and there's a few other criteria that the client would have to meet, but they can actually use this fund for income as well. So you're able to use it to pass on for death benefit. You can use it for chronic needs as far as, long-term care scenarios. You have access to your cash. You, again, pass it on tax-free. And now you can also use it for income as well. Some of them even have full return of premium that we'll get into later, that I like to say these products are a real use it, give it, and get it back, right? The clients can use it for the longevity rider. They can use it for the chronic care or the long-term care rider. They can give it as far a form of a death benefit, or they always have the cash value that they can get their money back if they ever need, if they ever fall in hard times, or if they find something better that comes along. Here's one of the greatest things as well. It's all simplified issue. So depending on the carrier that you would use, it would be as simple as maybe answering 15 health questions as yes or no's. And as long as the client can answer no's to all of the questions, they can proceed and they'll get coverage. The toughest one, the most cumbersome one, would be a telephone interview with the underwriters, but then you would know instantaneously, if the client is improved or not. So it's very easy. If you have those questions, if you have a client that's sitting in front of you and there's a little bit of questions as far as, will they qualify? Will they not qualify? let me know. Like I said, I always provide those 15 health questions, and you'll know right away at point of sale before they even walk out of your office if they'll be able to qualify or not. So you're not wasting their time. You're not wasting your time as far as just, waiting months and months and months and getting doctor records and, all of that stuff that usually you see in the world of life insurance is the most pain point that we have, is just that underwriting process. So the single premium life, they eliminate all of that. Okay. So we talked about the pros. Let's get into some of the cons that I've heard over the years. So single premium, it's not for everybody. We understand that. And if that's a pain point for one of your clients, that's okay. Ask the questions, get in front of it, and we have solutions out there that will provide recurring premiums. Not necessarily recurring premiums like a tradition, like a term or a GUL where it's forever, maybe 5 years. Maybe they want to pay it for 10 years. Maybe they're around 50 years old and they only want to pay to age 65. If you do get into this scenario, we do have options that will pay up to age 100. So again, there's not a lot of scenarios that you're going to come across, as long as you're having the conversations and understanding what your client's needs and concerns are, that we're not going to have a solution for you. Surrender charges is another one that people hear a lot, especially in the annuity world. I'm putting a lump sum premium down into this single premium life. Am I going to be able to get my cash back? The answer to that is, if that's a concern for them, well, then we do have products for that. We have products that will provide a full return of premium from day one. So it doesn't matter if something better comes along or if they all of a sudden fall on hard times and a week later they need their cash back, a year later they need their cash back, whatever it may be, they always have access to their cash. They always are able to return it. So there's really no downside. Again, it's just a matter for you as the agent understanding that these products are out there. We always used to tell the story years ago is when you're buying a car and you're in the dealership and you finally settle on a car, a red Mustang, and you drive it home that first day. And then all of a sudden, now that you have this car in your possession, you're looking around that road, driving from the dealership to your house. And now you see 10 other red Mustangs that are on the road that you've absolutely overlooked every other time that you've been driving. To me, single premium life is the exact same scenario. As soon as you start understanding the benefits that this can do for your clients, and the more conversations that you have with your clients on these, the more opportunities that you're going to realize and uncover just when you're doing your fact finding. So, again, it's very important to me to just understand what the products. And I promise you will start finding and discovering these things as you're talking with your baby boomer clients. Okay. So here is a sample scenario that I wanted to show everybody. So we have a female age 65. She had a single premium of $100,000, and that guaranteed her a $180,000 death benefit from day one that lasts all the way out to age 120. Now, if she likes the idea of having being part of the indexed a little bit, they also have the indexed universal life that I wanted to show here, that in year 20, the non-guaranteed benefit would grow up to $268,440. Now, what would happen in a scenario here, let's just say she passes away in year 20 and she has the guaranteed death benefit of $180,000. And the non-guaranteed, it did hold true to form, and it did grow to $268,440. Her beneficiaries would receive the larger of the two sums. If she decides that she needs to go on some claim as far as the chronic rider, and she needs it, she has fallen unforeseen health issues, and she's fallen on some times where she needs some cash, she's able to access, again, the larger of the two sums. So in this scenario, again, in year 20, if it's $268,440, that's what the carrier would pay out in form of chronic care to the client. And again, We talked about the cash value. There's cash value growth to this. So in this scenario, in year 20, the non-guaranteed cash value would grow up to $229,044. If she walks away from that in year 20, she would have that $229,044 to take with her. Slight, there is a little bit of tax ramifications because this is a MEC product. So she would be, taxed on the gains of that, the 100,000 that goes in compared to the 229. But as long as they are made aware of that, most often they need the money. They'll take it. Okay. So that's very powerful stuff. And again, use it, give it, get it back. They're able to use it as far as the chronic care, that 268 or the longevity benefit that we talked about. If it was the income, they're able to get it back as far as the cash value of 229,044, or they're able to give it as far as a tax-free death benefit of 268,440 in this example. So how where do people find funding for the single premium lives? At this stage of life, I kind of touched on it in the very beginning of the presentation. A lot of times that we see is that folks that have old policies that they have paid into for years and years and years and years that have cash value, that they don't need all of that death benefit anymore, or they're just simply tired of paying the premium payments. I had an uncle that was down in Florida. I was at a family reunion a few years back, and we just started chatting. And he was telling me about how in this scenario that he has some life insurance and he doesn't need as much as he did back when his daughter was younger, and he has some cash value. And I said, have you ever, looked into the single premium life for this purpose? You have the cash value. It's not going to get you huge amounts, like that's traditional life insurance. That's the traditional underwriting. But if you want a little bit of life insurance, and I say a good rule of thumb, it's not always, because it does depend on male, female, the age of the client, that sort of thing. But I would say, generally speaking, you can double initially their original investment. You saw in that scenario, the 100,000 turned into 180,000. So it's right around doubling what it is right out of the gate. So he ended up looking into it and ended up purchasing a single premium life product, and it's been fantastic. Now he eliminated those premium payments that he was paying into for all those years. He has some tax-free death benefit that he can pass on to his wife or to my cousin. And if God forbid he falls on any sort of unforeseen health issues, he's able to tap into that and use that for home care or nursing care. CDs is a big one. You're going to find a lot of people that have CDs, and to me, CDs are just the dying investment because folks are paying taxes on those gains each and every year. So if it's just sitting in there and they're earmarked to the next generation, why not pivot that CD funds into a single premium life fund to where there's no taxes involved as far as the transfer. They're able to, whenever they pass away, they're able to pass it on tax-free. They have access to it by full return of premium. It just gives them more flexibility. Okay. So, to me, I hear somebody, if I'm in a conversation with them and they have CDs and I ask them what they're for, and they say, well, I just have them sitting in there because that's what that's what I've done all my life. My grandfather told me to purchase CDs. My dad told me to purchase CDs. My mom, my family member. I said, well, if it's earmarked for the next generation, your kids or your grandbabies, let's look at a single premium life product because you always have access to it and the taxable events are going to be minimized. Retirement funds, they're a great way. Again, I talked about earlier, there's not a lot of scenarios that we're going to come across that as long as you're having these conversations with folks and they have interest, there's not a lot of scenarios that we're not going to find a solution for. So there's actually some single premium life insurance that takes qualified money And what that does is it spreads out the taxable event. Unfortunately, Uncle Sam's always going to get his taxes. It's just the way of the world. But what we are able to do is minimize the taxable event for your client and take it from a qualified account into a non-qualified account. And now all of a sudden they pay taxes over a period of time, smaller amounts instead of a one large sum that they might pass on to their grandbabies or to their loved ones. And you're able to now get rid of that tax time bomb while the client is living, pay smaller taxes, and then pass on the funds to the next generation. And again, going back to have access if they need it, and the chronic rider for any sort of long-term care style concern. RMDs is another one, again, with the qualified funds. We're getting into that age where, everybody in our sphere is starting to get RMDs. I'm in my late 40s and my parents are in their 70s and they're getting RMD payments right now. And they just, they did a very great job of saving and they don't really need the money right now, but they're forced to take it. That's a great single premium life opportunity. We would talk about perhaps maybe using one of the recurring premium scenarios, options in a scenario like that. But if they do like a lump sum, again, we have a solution for that. So qualified money, non-qualified money, we got you. We can find a solution for you there. And certainly savings. I mean, cash is king. So if they have a savings account and they want to buy some single premium life, easy peasy, lemon squeezy. They're able to do that. All right. So here's just some stats that I wanted to touch on. The average sale is about $81,500. So it's a good chunk of change. Single premium life, they pay out very well. So, give us a call. We can talk about the commissions on all of those, all of the sales, but they're very, if you're looking to supplement some of your, Medicare clients or, annuity clients, single premium life is a great way to find some extra cash laying underneath some proverbial mattress. Most of the sales, honestly, are female sales. The females typically outlive males. So when we start talking about, well, who's going to take care of you in time of health concern if your husband, passes away, actuarially, unfortunately, we do as males. Who's going to take care of you in that time of need? And the wives start thinking, oh my gosh, you're right. What is going to happen? And statistically, in the long-term care world, it's the daughter that lives closest to the parents that are the ones that are taking care of the mom and the dad. So I always like talking about the family and trying to use the pain point of, do you want to have the burden on your son or on your daughter, more specifically? They're trying to raise their life. Would they be able to take time, them as a parent, when they were younger, to take time out of raising their children to go tend to their mother and father, when all they had to do was preemptively buy one of these and really cover the cells for the care, to that they don't have to be a burden to their loved ones, to their son, to their daughter, to their neighbors. So about 63% of the sales come from females. Little stats there, 74% comes from the savings, the CDs, the non-qualified funds. That's predominantly, life insurance is non-qualified. In order for it to be passed on tax-free, it's got to be non-qualified. So we see a lot of the sales from there, but we do see some general annuity sales, like I talked about earlier, retirement, 401ks, RMDs, those sort of things. So we do see that. And it's good to know that there are options out there when you're having these conversations with your clients. And the average issue age, 72. A lot of times people start, being concerned about, once you get up into your 70s, that life insurance is going to be too expensive, or they have health concerns, as they get older. That's why it's so important to understand that it's simplified issue, and they're not going to get table rated either. That's the other nice thing. It's either they're going to get it or they're not going to get it. And it doesn't matter if they're 50 years old or 72 years old, they're going to get it or they're not going to get it. As long as they can answer those questions with all no's, or complete the telephone interview, depending on which carrier or which route you want to go. They're fantastic options because they're not going to have to get poked. They're not going to have to get prodded. They're not going to have to give blood or urine samples or meet with anybody during the day, have paramedics come out to their house. It is truly a simplified issue product. And again, just a little age breakout there of the percentage of sales. You can see as people are a little bit younger, I say about 50, 54. We do see some, not a whole bunch, but it's good to have the conversations, maybe plant the seed with them. Get them thinking about it as their kids, 50 to 54. That's when the kids start moving out of the house a little bit. That's about the age, 55, 59. The house is getting paid for. Now you start getting into the 60s, 65s. Yeah, they're starting to get the health concerns. So it's always good to just revisit this every time you do. Client reviews. Did anything change in your life since we last spoke? That sort of thing. So again, it's just one of those things. It's just know that it's out there. It's the red Mustang or the red Corvette scenario. Just have the conversations with folks. And you're going to learn, you're going to discover that the sales are going to be plentiful out there. So it looks like we have some questions out here. Ed asks, why use cash value for single premium instead of reduced paid up on original policy? Well, you could do a lot of times that would be an underwriting question. They may want to go traditional. If they want to go the traditional route and go through the full underwriting, if they want to do a simplified issue underwriting, I would look at the single premium life. I would say predominantly, though, it would be the underwriting aspect of things, because you're right. If you do go the cash value on a reduced paid up on a original policy, again, what we're doing here is we're providing options, right? So it is one of those things that is what is most important to your clients. Have those conversations. The beauty of it is, Ed, is that we have options for everything. So one scenario might be good for one person and another scenario, might not be good for them, but maybe, so it all depends. It's all case by case. So that's why I ask that if you have conditions, if you have questions, you have concerns, if you have scenarios, if you want any sort of illustrations, simply reach out to me, Jason Collins. My number is 717-216-8038. I could be reached via email at jasonc@urlinsgroup.com. I'd be more than happy to go over any of these scenarios with anybody on the call today. So I want to thank everybody. I know we talked about an hour, but I figured we kind of would get out of this pretty quick. So have a wonderful day. If you're in central Pennsylvania, it's raining out. So it's a great day to be making phone calls and meeting clients. So have a great day, everybody. Thank you.